Hi. Hello, guys. Can you guys hear me okay? Can you guys hear me okay?
Yeah, I can hear
You can
you.
just, so welcome, all you guys, to this Wednesday Zoom call. Um, just, um, just let me know if you can hear me. But this is a Zoom call number 5. So I've been doing this for a while now, and since all this beginning, at the beginning of March, and so this is the Zoom call that I want to set up every week, and the idea is I want to provide enough support for all of you guys to invest in multifamily, and the best way to do it is to actually to set up a weekly call or monthly call. And already the people who have been joining our group knowing that we have monthly call, we have monthly meetups, and and I'm just setting up this because this is a rough time. I see a lot of some of my friends, many of my um, colleagues. It's really going through this really tough time. There's no doubt about it. Um, but the way that I look at it is really, can we what can we do to take advantage of the current situations? Um, I'm strongly believing that that's something that we always can do. We can always do, um, regardless of what is going on out there. And I encourage you guys so you guys won't be talking, but feel free to share your video, if you are comfortable. And I can guarantee your image will be really small anyway, apart from my face, and along with other people joining this call. But so I'm gonna have different topics on every week, and really trying to figure out what is the best way to give you guys value. And I know a lot of you is it's reduced work. A lot of you is stay at home. It's something, to be honest, something to look forward to. Something to look forward to when you're at home. We all need that routine. We are in this funny time. We have kids at home, and we're all trying to get things done. For the guys, we still have work, and fortunate to still able to work at home. So that's the intent of this. At the meantime, I'm going to pack with information that I see on the market and on the real estate front, and also on the macro front, um, because it does affect real estate. The capital market does affect the real estate market hugely, and we can really, we have to pay attention to that. What's the development? What's going on? And I would like to provide some of the updates, but so let's jump into it. So for some of you guys haven't seen me before, um, so my name is Howard, and so my company is Here to Break. I had started investing into the real estate in 2006, 14 years ago, and investing in Canada, US, China, and Hong Kong, mostly on a single family. Since 2012, I invest in United States, and 2015, I started investing in multifamily in the United States. I've been sharing and talking online, offline events since 2017, and I have speak to various event and to various audience. So this is some of the people that I'm fortunate enough to be partnered with, to be learning with, and I don't create knowledge of the bubble. I learn it from all these people who have been I have been fortunate enough to be learning from. Um, so again, why we doing this Zoom call, right? It's really I want some positivity out there. And if you're watching the news all the time, they're not sharing the recovery numbers. They're not sharing a lot of the good things that's happening. um, and that's a lot of good things that's actually happening right now out there. From people recovering and countries getting better, slowly and slowly opening. Restarting economy. But really, this is I shared this with the last week. This is like a lot of people say that this is unprecedented. It is, and we haven't seen this before, uncharted territory, whatever you like the term. But I want to say that, and I'm sure you guys, no matter how bad it sounds, what is going on out there, and this is going to pass. And this is also another reason why I want to have this Zoom call. I've done to create this community is the sooner you can you can figure this out, and knowing this is all going to pass sooner or later, and the sooner you can actually go back and start to create your opportunity. And when I say opportunity in this group is really the multifamily opportunity. You pay attention to what is going on out there, and I pay attention out there. I'm daily. I'm talking to brokers. I'm talking to real estate professional. I'm talking to mortgage lenders. So, excuse me. So I'm paying attention to the market on a daily level, and on top of that, I'm paying attention to my investment on the multifamily side. So it really comes down to a lot of negative out there. There's no doubt about it. But how do you prepare yourself mentally, and how do you prepare yourself to take advantage of it? There's going to be a lot of opportunity out there, um, um, in terms of pricing reductions. The market, some of the market have overbuilt, but to be honest, it's it's going to be the investor who is taking the time right now, and say them week in and week out again, to really to create the relationships with your local team, with your market, and find those market to really to take advantage of the opportunity in whether we talk about 6 months, 12 months, um, and we know this. And in fact, I want to share a story, a personal story with you later on. Um, is Because I am seeing this, and we have seen this, but this story is really heated to me because that's happened to myself. So the world is not coming to the end, and make sure you fully prepare to this. And I apologize because I just find out that I haven't shared the screens. That's why I see a lot of I see a lot of um, so let me do this. So there. So you guys see the screens now, right? Perfect. Um, so my apologies. So I've been sharing. I was just talking strictly without sharing the screens. Um, but really, um, the best time is to get prepared right now and know the market, and get to know and create the market, the deal flow. And that's why this is the first Zoom call that I actually talk about the X steps. um, and I talk about it all the time on my monthly um, boot camp or monthly meetups. But this is the first time that I will be talking to all you guys about how do you really research the market, right? And I was talking to one investor yesterday. Um, this is the best time to actually sink into the market and learn how to create the relationships. It's going to be a lot of opportunity out there. The Fed is printing a lot of money, and that. And who knows whether that 6 months or 12 months will come. But we know this is not the if 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 the market is printing 3 times the money or 4 times the money that we have for the last 2008. And it doesn't take so much harder to actually guess what is the price of all this real estate is going to be, what is the price of all the stocks is going to be. It's because they're printing so much money. And I have a screens on that later on. Talk about that. Um, so I'm just give me 1 second. I'm trying to figure this out. Here we go. So because I'm like why what I think will happen is you already see that on news, and that's what the kind of my little prediction is. People are starting getting worried about physical separations. Even if you watch the news, even our PM from Canada, he can do social distancing, and that's what happened yesterday, or on the weekend. It happens from the high level, from the government level, all the ways, to the normal everyday people level. We really need to figure out like the restarting strategies. And some of the news has been talking about it, how to restart. Some already have, and I think this is a great opportunity for you guys to restart your deal flow, restarting your investing strategies, talking to investors, talking to brokers. This is fantastic opportunity right now. So what happened this week, as I said, there's been some talks of the restarting economies that you probably haven't heard about that. 2 weeks ago, it was only Trump's talking about it, right? Um, Whether you like him or not, but he was the first one who talked about restarting economy. So now we're seeing some of the country in the Europe level. They're talking about restarting economy, restarting slowly, restarting it, and we already like this is kind of after what we happened we've seen in Asia, um, and some of the country and some of the states are talking about it. So are you waiting to start or really starting? Right? Are you really because this is kind of what happened is you if you want to take advantage of the price correction in 6 months, 12 months, you really cannot wait until at that time to creating your deal flow. You really cannot wait at that time to really going to talk to your investors. And you really definitely cannot wait until that time to get the deal coming. Um, uh, a, a lot of deals that is going to be sold at that time and a really good price, whether there's 10, 15, 30% off from the peak, and we don't know, is the deals that has been set on the market from now on until 6 months later, 3 months later, that is still the price still correcting, and no one's really willing to go in and take basically go in the market. So of course, this is market to market and it's all over the places. You have to really look at your own market to figure it out. But my point is, you have to do right now, and right now is while you are have less work, have more time. Um, in fact, I've been busy. I've been way more busy talking to brokers at this time than I was before. And funny, the funniest thing is because everyone, uh, all the brokers right now is have the time to talk to me now, right? All the brokers right now have the time to really talk to me and which has never happened before, because everyone's were really busy, where the economy was really hot. So they say that you go in the right time and you make the money when you're going in, and this is probably one of the situations, and I'm gonna tie it up on my own story later on. Um, so first, the people who are going in right now, we're gonna have the first mover opportunity, um, and this ties well to why you have to the X steps. I'll talk about it in here in the next seconds. Is really you're going to research the market and find deal flows and lay it out here for you guys. So I say that a story I want to share, and this is me, and I was just starting to sharing and talk to investor, talk to people, and many of you guys were not knowing me. I didn't know you guys at that time, but that was the time that I started doing investing. And talking about multifamily and sharing with people. 3 years ago, I shared on the Wave coffee shops in 17. So talking to a group, and why I wanted to tell you about the story at that time is basically I was telling a story that I started to go in at 2012, and I go to US and go to Phoenix, and that's where I started into investing in the United States start. And I remembered when I tell the people during back to 2008, this is the perfect opportunity to go in. And while me and my wife, the whole time, you know what, we at that time we really don't know because we're just starting. You know, I started investing in real estate 2006, but something in deep down keep telling me, and we have been kind of using that. Me and my wife, we always telling ourselves, you know what, United States is not going to go down like that. And while everyone is not believing us, we didn't really believe ourselves too at that time, but we just keep saying that. Um, um, but obviously, no one of crystal ball, and if one thing that we do know is during the history of 2008, 2009, the government printed about 1.5 trillion capital. And I know the world is way more inflated now. But we're not printing. So in 1.5 trillion in the time of 18 months. So that's what they do it, how they do it. And they do it way slower because the Bush administration cannot do it. And then when the Obama come in, they have to top and then put in, the total package is about 1.5 trillion. And now we do it in about 6 weeks, and we inject all the capital. Um, and it's not really not concerning. I'm going to share it later too. Probably 6 times or 5 times, depending on which day you look at the Fed balance sheets. I have a screens later on I want to share, and they're buying all sort of things, right? And if that didn't go down, if that didn't bring the whole world down, and it did go through a big correction, and the history like talk about itself is it did come back up strongly 2013 all the way to 2019. um, then you think this is a good opportunity to buy or not? um, Again, I don't know what's going to happen. No one's knows going to what happen in the future. But it's really the idea of this Zoom call is really want to get you guys ready. Really want to get you guys ready when the opportunity is here. You don't have to wait 6 months. You don't have to wait. You can basically immediately to put a trigger. So 8 steps. So what is the opportunity now, right? So I share the screens every week, and as a tradition, I'm going to keep sharing this again. But basically, this is what happened at the beginning of March. So we were at so I can see the screen, so I'm going to juggle a little bit here. So we were at so on the last September, you see that the deep down there. You can see if I can draw that here too. Yeah. Um, Here we go. So on this, so in here we were at 3.7, 3.8 at 2019 September. That's the lowest point since the GFC happening, and we print so much money and trying to since 2015, 16, the Fed trying to reverse the QE. That's what they say. So we're trying to reverse the QE, and they got all successful until if you still remember, the Fed at that time they used to call it the repo market, repositioning market, basically short-term lending or whatever that is, to pump a lot of cash, and that's the time that it happens until beginning of this year. Let's just say there's about 4 point, so they do this, is about 4.2 trillion. I'm sorry for all you guys who have been paying attention to this, but I really find this really interesting because you really have an idea of how the Fed is actually reacting to this in response to the last recessions. And so, and you see this is in here. I don't know whether you guys see this is 2008, and they put it about so they're starting from 500, so half a trillion before going into GFC here, and then they put, so this is between 6 months or so, and then so they pump all the way from 1 to 3 trillion, and within 3 years. So this is what they do. It's a really gradual, and they keep printing money, and all the way to 2015 and 16. And then the next graph show what happened in weeks. So a little background information. Fred, if you go to the website link of just Google Fred Federal Reserve balance sheets, and you will basically go to the page, and you will see every Thursday the Fed will this is public information. They will release the balance sheets on their website, and that's how I get the information directly from the Fed website, Federal Reserve website. So the last slides, it was there was beginning of some mid March. So we just about a month now. So we are at the 4.1 trillion here, and then in the next week we are at 5.2 trillion. So that's just about a trillion in about a week. And then we slow down a bit, you can say. 1 week later, we were just shy of 6 trillion, and we just shoot up to 6 trillion in the less than a month. So we were from 4 all the way to 6. So we basically increased the debt, or pump 30% more liquidity, or printing that much money to the economy to buy all the asset, to support the loan, and so on and so forth. So I was just sharing the graph before, but this is what I find out by reading. So for all of you guys, if you don't know Howard Marks, he is the managing partner of Oak Tree Capital, and I strongly recommend all of you guys to subscribe to his newsletter, to his memo. He called it the memo, Howard's memo. So it's talking about really. So basically, he's a really respectable person in the investment community, and along with others really smart person in the investment group. So I follow this guy a lot, and it's really balanced, the real. But basically, so to give you a magnitude of things, these guys were sitting on the dinner with one of the Federal Reserve president, one of the 12. So he knows quite a bit by talking to people who, just like I was talking to real estate lenders and brokers, but this guy is top of the head of the bankers. So he knows all the bankers in what's going on. So long and short is he summed up right now with the 2 trillion just showing up right now. So the government of the Fed is buying a lot of debt, ranging from non-investment grade. So you see this right. And this is actually on the newsletter that I put it on here on the bottom, say the credit. He specifically mentioned about non-investment grade. So we're talking about triple B grade, and so high risk debt from companies, from over leveraged companies. So that's what the government is supporting. And of course, the government is so the government also is supporting, is not showing on here on the graph, is if you are in tune with the commercial market, is so the commercial market is completely, the commercial lending market is completely on a debt on a pause, except the apartments. Why is that? Because it's, again, the Fannie Mae and Freddie Mac is a two agency lending crime cooperation. If you're not familiar with them, so this is created since 2008. So two biggest loan agency from the government directly supported by the Fed. They basically privatized. They were crime government organization before, but they privatized 100% now, and it's directly controlled by the Fed. And their mandate on these two organizations, they were thinking in 2016, 2015, there was talks that they're going to be disassemble this two company because we don't need it at the time. That's a history. Um, but the mandate, the latest mandate from the Fed to this to agency, we call it agency loan because that's actually from the government, um, is um, they want to keep liquidity in the apartments market, and obviously because if you study a little bit of Freddie Mac and Freddie Mac, these two organizations, they have a mandate to make sure that people have a place to live in Americans. So that's why they're doing it. Um, of course, if the apartments owner are not able to get loans and buy apartments, and it's the biggest problem is the general tenants, the market, the public tenants market, not going to have enough apartments to live, and that's creating a really huge social problem. And that's kind of the background is why the government is supporting Freddie Mac, and the government is supporting Fred, and Fred is supporting Freddie Mac, and Freddie Mac, these two agency, to provide liquidity so to the apartments market. So I mentioned that this is a only two lending other than the banks. Um, the insurance company has been stopping the lending to all the loans, and so all the insurance companies, same as CMBS loan, and that were uh, there were a lot of that. So all CMBS and also all insurance has been stopped, um, based on my understanding with the talk with with my talk with the lenders. So so you really have to pay attention to what's going to happen. We're not putting 1.5 trillion, we're putting 4 or 5 times of the money, and it's still developing to the asset, to the company, to the stock market, you know, um, and 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 we do see the stock market rebounded, and but I guess we don't know. We have to answer a lot of questions. So what does this means? You know, we know the U.S. is about 21, 23 trillions economy GDP, and we know the commercial real estate was 270 trillions. So I guess the implication is when we're putting all this money to the stock market and to the commercial market, so what does this actually means? How big is that? And is this going to be, so if this all this company is not going to make it, so we're buying time for all this company. So what does it mean? So we have a lot of questions. Um, so I put an implication slides. I think as a price, we continue to be overinflated after this. Um, after this um, drop, a little bit of drop, and I don't know whether it's 3 months, 6 months. Um, um, so it won't be a long recession. So this is a typo on this slide. It won't be a long recession. This is what I think, because Fed doesn't want one, right? The Fed is have a really strong mandate to keep everyone flowing. If you're looking at, if you're following what Donald Trump administration has been doing, he is all about opening economy. He's all about keeping the economy back on running, and the Fed has been just doing that. If you follow one of the Fed um, latest, or 2 weeks ago, the chairman of Fed, he's talked about one thing. So infusing confidence is one thing, but this is what he talked about. You see, the Fed has unlimited amount of power to keep the economy on flow. Then obviously we smile, because what is unlimited means, right? Where does all this money come from, right? I in fact, and I haven't put on the slides here, but I was, there's another story I want to share. I was so my daughter, I was playing a little bit of give and take with my daughter yesterday. My daughter, in her piggy bank, she has $130 in her piggy bank and in her wallet. So I was trying to teach her something about money. So she want to use that money to buy a toy, like a toy house, because everyone's now is at home. and she put it on her wall, and we didn't know that she had 130 bucks, and we were trying to teach her about additions. But basically, long story short is I told my daughter Hazel, I say, well, why don't I give you, how much money you have? And she'd say, I don't know. And I tell her, you have 130 bucks. It's just the toy you're going to buy is 100 bucks. And I tell her, why don't I give you 30 bucks? And would you give me 130 bucks? And she gladly agreed. She gladly agreed. And basically, what I did is I take 130 bucks, I give her 30 bucks back. And 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 the reason why I want to share this is I don't know whether this is what we're seeing in the grand scheme of things, um, but the government is not only controlling um, the political power, which is what have federal jurisdiction, constitution, like they control political schemes, but now they're also printing so much money. They're also controlling. They're basically socializing the stock market. Which is really opposite of what the capital market works, right? But the long story short is why I tell you about the story I was having with my kid is you really have to know what is going on in the market. Otherwise, um, otherwise you really don't know when someone give you 30 bucks and actually getting 130 bucks from your bank account. You really don't know, right? You really don't know if you don't pay attention to the market, and and I don't know. I really don't know what's going to happen in the future. But I think if they put in so much money, and all this money had to go somewhere, and that's going to be only two things: is really the stocks and the real estate. And that's why I have really good confidence. And based on my memory and what I learned from last time in 2008, the world has not come down, and the United States has come back up strongly for one way and other reason. So, but again, like this is what my observation is from my experience, and if the market do come back up in 12 months, in 2 years, um, and that's why I've been keep telling all the guys, all of you guys, and this is the time to take actions. Um, so really, it comes down to this. I share the steps to invest all the time on my meetups, but this is the first time I do it, and I want to do it in the format that I have been doing in meetups. So number one is about researching the market. You cannot know where to go if you don't know your market, and I intend to do it at this time. And then on the upcoming weeks, we're going to talk about all the steps, including raising capital, how to create your credibility, how to create your team, how do you negotiate deals, what is the underwriting strategies, how do you underwrite all these deals when the market is like this, and and how do you finance it. The financing is really challenging right now, because the market is just in a pause. So this is a really timely topic, because um, nothing's happening right there out there. Nothing's happening in the commercial world. Nothing's happening. The activity really ground to the halt. So that's why the market. That's why when creating the market, when you go to the United States, um, to unleash the market and talk to the brokers, this is where you have the great opportunity, because they really don't have they all really have a lot of time right now, and they're all going back to the square one, like all of us, to really figure out how to remarket, how do we restart it, and that's the time to do it. So again, I make this funny graph is so it kind of summarizes what we talk about, the X steps. So market research, market research is the first thing you have to do. Number one thing is whether it's good time or bad time, you always want to find the drop, where the drop growth is, and I list a couple of the resources down there. You can go to You can go to census board, and in Canada, if you're looking at Canada's market, you can go to statistics.gov, and but in the US, you go to the BLS.gov, and so that's where you can get down to county. It's a lot of information. I don't intend to scare you, but you go to the BLS.gov, you see a lot of information down to county, jobs growth, demographics, and all that. And really, one thing that you have to be really be careful is the data. Um, Usually from all the publications, including next one, the Milken report, the apartment finance, and even the brokerage. The brokerage research is actually what I want you to focus a little bit more, because they're a little bit more looking in the future. In time like this, you want to look a little bit more in the future, and the reason is, um, because all the data, including the government data, we talk about last 3, 4, 5 years job growth. You know, all the major cities, they're showing so much job growth. Um, and of course, now we're looking at the future. You know, the future is probably going to be different from the last 2, 3 years. It's definitely going to be different. So what do you pay attention, right? What do you pay attention, as in, what are the jobs still going to be in the market? You know, what are the jobs that if you are investing in a really big tourism town, right? If you were anyway, if you talk for many of the cities in Florida, there's a really big tourism town. You know, people fly to Florida to go to the cruise, and people go to a really hot place to enjoy the weather. So if we are stopping many of this, so what does it really mean, right? So what does it mean to the market? So we have to pay attention. And two of the biggest things that is going to be, well, a few of the biggest things, and don't, and you probably would pay attention, is really the medical industry, right? And with this, with you know, with every kind of event that has happened in the history, that's always, and this is not really any kind of theory. The one profession that has go up substantially, I'm talking about in terms of authority, is really the doctors. You know, they're the big winners. Like, if you talk about, everyone's pay attention to what they talk about, right? And you don't even know whether he's a good doctor or bad doctor. And I don't mean to be anything different, but it's really just nature of things. Every sequence event, there's always going to be a winner. There's always going to be a loser. So doctors have, if you're doctors, your currency, your speaking currency have increased. But if you talk about on the macro level, is really the medical centers. Where does medical centers? So you can research that. Well, I can give you an example. Phoenix is really big on medical, right? They have a huge medical field. In fact, that's what bring the Phoenix out of the market. I remember when I was started investing in Phoenix, I know they always look at medical. And then the number two things is really the government and the military. And the military base is not, uncertain time like this, they're going to throw more money to the military, because because this is uncertain time. They have to protect the country, right? So the major air base, and even the area that's really close to, the Washington side, and where the other administrations, where it's going to be, that is going to continue to do well because of the jobs, right, from the government. And so, and of course, the last but not least is really the high tech sector. To a degree, but when everyone's staying at home, where everyone's trying to move things online, we're doing these meetings online, where everyone's trying to move things online, then certain aspect of the tech, and I shared that one screen on the last 2 weeks ago on the stocks, how much affected from in terms of having the IT groups or the technologies is affected by this downturn. They various degree. So you have to pay attention. It's not only, you can't just say that the IT is going to do right. You can. We do get affected various degree. But yeah, so the medicals and the government and the technology sectors is going to continue to do well, and if I have to pick one, I would always pick the government, because the government is always going to be there, and that's why I always want to find bases like the air base or military base, navy base, whatever the base is. Uh, when they build $1 billion of facilities in the area, and usually they're huge, 20, 15, 30,000 employed civilians and and the army guys there, they're not going to move that, and they're going to be sustained level of employment that's going to provide you as an apartment investors. That's really really important. Sustained level of tenants. So what changed, right? We always talk about what has changed. One thing that used to be good were were university. Now, no one's would guess that actually the university will stop to go to school. They will start to move everything, from physical institutions all over the U.S., all over the world to go home. No one's thinking about that. So that could be a challenge, right? That you have to pay attention, because what if I think that's what happened in Canada. They talk about resuming the school not until 2021 university, and what this all means to the student. They have to go back home, right? They have to go back home, or they're going to stay there. But you can see that lot that will go back home if during these times. In fact, I do know a couple of persons. They already have moved their kids home, so that's going to affect those kind of student housing. Student housing used to be very very good, because we have been spending a lot of money to our kids. The previous generation is spending a lot of money to this generations on providing the prime housing for the kids. So why give you all those informations? Because there's a tons of market. You have to really sink in and do your market research. And you can go on to CBRE, you can go to you can download the latest. So I guarantee, I recommend you go to all this website. And if you don't have a link for that, ask me for that, because that's on a daily level. Now they have all these kind of special reports on the daily level. Every day they have something new. It's basically come down to that. To cover this, what does this mean? For real estates, for apartments, for hotel, and for offices, is huge implications for all of the commercial real estate properties. And in order to take advantage of that, in order to take advantage of where the money will go, where the demand will go, you have to really know. You have to really study about the future. And so really want to give you the basics of how do we decide a market to go in or not. It's really that in the US they always talk about, in Canada too, and the numbers are a little bit different. And they'll always talk about the primary market, the secondary market, and the treasury market. And it's really high level, but really want to give you the numbers so that you guys can have a clear idea. What is that means? So the major market is really um, over a million, 2 millions and up, and the secondary is really between 500,000 to a million, and the treasury is smaller, so at under half a million, and then that's like even smaller town and counties that's underneath that. So, and I always pay attention to all primary and secondaries market, but knowing this, the primary market is usually very very competitive, meaning that you really cannot, because everyone's going there. The Chinese is going there, the Euro fund is going there, everyone is going there, all this market. Unless you really create a deal flow, meaning that you really know someone really intimately in those market and they have deals, and unless you have that connections and relationships, is really competitive to go in the big market. In fact, years ago, I was talking to an investor, and he shared with me, and I was just starting at that time. He tells me, "So Howard, I'm really," he's talking himself. He is very in tune with all the brokers. He owned about 2,000 units at that time in the Atlanta, Georgia market, Southwest market. So it's service market. And then tell me, it's like, unless you uh, really know the relationship. I'm talking about the relationships. It's going to be really hard for. He's a friend of mine, by the way, but he said this. It's really hard for you to compete with people who have relationships. He's actually talking about himself. He doesn't know all the people. Of course, he doesn't know. But what he gave me an example. This is an example. I can give it to you now. He is able to submit offer that is less than. He's not the highest price. He's not close to the highest price on offer. This is back to 2016, 17, and and the way why he can accept the offer even though he's not highest because he is he is established in that market, and that goes into so it can be lower on like on give you an example. If for $50 million property he can be a million or 2 million lower, and not because of anything shady or anything bad. Okay, it's because he has proven in the market he can close. And the biggest problem in the industry is really you locked on the property and then you cannot close, whether you don't have fund usually, or you don't have get your lenders aligned. So this is the biggest thing to pay attention. And when I say the big market and the small market, and 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 everyday investors are starting to do this. If you don't have a lot of cash and don't have a lot of backing, a lot of relationships, a lot of track record to back you up, and I always tell people, to start with the secondary. In fact, this is his advice to me, and well, his advice is, you feel free to look all the market. By the way, don't take my word. Feel free to all look at all, and in fact, I give you some of the big markets so that you know what is example of a big market: San Francisco, New York, Boston, Seattle, Houston. These are all the big market. In fact, do look at all those, right? I look at New York. Why I want to look at? I want to see how this affecting New York. Um, uh, I want to see how this affecting Seattle. This is they call it the center of this pandemic. How is all this affected? And how is Houston affected? Houston is really big on oil. And this is like a really interesting, just like us. Houston is just like us. With what's going on with the virus, they diversify themselves quite a bit, but but what's going to happen with all this oil price, and the economy is going to stop. So, but I I always look at a secondary market. It's because um, you have much more higher chance to be successful in creating a relationship, because um, you are 1 in the 20. Let's just say that if I have to put in numbers, 1 in the 20s, and obviously that number should be way higher. But you are 1 in the 20 to go in the secondary market, but you are 1 in the thousands to go in the major market. So of course, if you're doing your marketing right, if you're creating your relationship right, it's much more easy to get attentions, to attract deal flow in 1 in the 20 scenario than 1 in a 1,000 scenario. And I get it. A lot of investors, when we're starting in, want to go in the market that is famous, that's everyone's know, and always don't like it myself. I always don't like my market to be on the news, to be honest, because that means there's more competitions. I know my market is well. I don't need the news to tell me and then move all the investors to that market. You know what I'm saying? And that's what happens to the primary market. Everyone's know about primary market, and everyone's want to go in, and where everyone's going in the market, and there's going to be no deals. Okay, so but that's my philosophy, to find good deals, and to find cash flow properties. By the way, that's a major things. And the secondary tertiary market, you will see there's less chance to be get overbuilt, because there's less builder to be in there, less competitions. And um, and 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 I even give you some of the secondary market example. I didn't Google it. I actually go in one of the report, and actually I know this is actually some of the secondary market: Austin, Phoenix. Phoenix is a market I do know. Atlanta too, and then St. Louis. I know that on the treasury side, and this Salt Lake City. So go read the market research, and if you don't know how to find it, reach out to me. I can help you and send you a copy, and I can direct you with a link to download those report. And then that's somewhere that you can start, right? That's somewhere you can start. And so on the research on the market, one thing that um, I've been always stressing about is that's two side, at least two side on any market research. That's the internet side, which basically you go home and stay at home and read and decipher information from all this PDF and pages and pages and pages and pages, all that information. And that's also the secondary part, which is to really on the ground level, you know, you can find way more information by creating local contact and talk to the responsible representative at the local level, and to request information from the local level, and you can find more information on that than go Google or CNN and find what's the top 10 market in the United States. I'm not saying that you don't do it, but that shouldn't be the only thing that you do. But now this is steps. Now you have, let's say, free markets. Now this is the next thing to do. You can start contacting the economic development team on each county, on each city. Sometimes on the county by county they have it. Sometimes at the city they have it, but they do have it in the U.S., right? And we have it in Canada too. And then next thing is also you can basically figure out what this chamber is doing. The chamber is a really good way to gauge how active the government and the economic development department is also the same. How to gauging how active the government is trying to do. You know, it's so important what the government or the leadership is doing. That's going to affect how the city is doing. Again, I say that the city that's not doing so much economic development, meaning that they don't put resources to promote, and they don't put people to answer the call from investors, and they don't do promotions, they don't put marketing campaign outside. Well, that's going to be 100 times less competitive with other city or county or market that's doing those. So talk to them and figure out what's happening in the local level, and talk to them. They tell you endlessly. They will tell you. They can talk on the phone with you for a long time and figure out, basically tell you what's happening. And they tell you, well, we have been putting money in this area and whatnot, and no, the government has been doing a lot of tax incentive, so on and so forth. They tell you all those, and you wouldn't be able to easily accessible online. And you're going to figure it out in about an hour to basically hold market what's doing by talking to the government there. Master plan is another one. So master plan is really long range plan, and every city would have that. They talk about what is the vision of the cities, and you with that you review a lot of things. That's not noise, because there's a lot of noise when you go online. How well is Detroit? You get 3 pages of useless information. It's all marketing material. So, and then request the master plan, request the path of progress. Path of progress basically means that where's up and coming area, where's the revitalization area in neighborhoods within a city, and then always I will answer job growth. Job growth was last year's, current year, 5 years, and you get a trend for that. Another thing I also ask is what is the pipeline? What's your construction pipeline? How many permit have they pulled, and how many have been absorbed in terms of single families here I'm talking about? Why is that? Because it tells me whether the market has been overbuilt. Even though we are not investing in single family, but single family overbuild will directly affecting, and also multi-units, that will affect us, because they're going to be, some of that will be going to the market and become competitions for apartments. So the reason I put up these slides is because this highlight the aspect that you have to, research your market is great on online. and reading documentations. But this is a big part of it. You can actually figure it out much more efficiently, easy, by talking to the government, by talking to chambers, by looking at the plan, and figure out, you know, what they have been doing, like, on the local level. That usually is a really good conversation. And also, you can also, when you go into the city later on, then you actually meet that person face to face, and they give you so much things, because you know what, this is the job to promote a city. And give you a really really simple um, situation is, if it's just the city is not putting money into even to promoting its own, then usually you can kind of figure out what is the leadership is like. Finally, make a decision on the market. Um, Whether this is very very good after you read out all the material, or you find out this is not so good. Now you already have a really good you have a really good idea. You know, let's say on 0 to 10. I never really truly tell people to do that, but if you're trying to make it easier, you know, to make a decision on 0 to 10, how good you think this market is good to invest. If it's 6 to 7, you can probably move on and start calling brokers, because that's another thing. You can actually see deals coming in, that whether those deals is going to make sense or not. In fact, you should know this way earlier by going online and see some of the online deals. You don't invest in those deals. You don't, because those are not the best deals. But by going into each market, so we talk about free market now, each market, then you can actually go online on either MLS or go to NewNet, go to find the apartments, and basically find out, are they going to cash flow or not. So if you're in this stage and you haven't done any underwriting, I know I'm ahead of myself, and you probably wouldn't know whether the deal will be cash flow or not. And I will talk about underwriting in about a month. When, if you look at the diagram, that's a part of what I want to do, underwriting on a high level. And you really can know whether that market really can really give you the deals in cash flow or not. But really the next steps is, after you figured out, uh, the master plan, you talk to the economic development team, and you have the drop growth, and you read so many report on the market. Now the next step is really going to be calling brokers. you know that's what I've been talking earlier, is really calling brokers. And really, the first thing I would ask, at this time, really is a conversational piece, is how is your market doing right now? How is your market reacting to these situations? Are you guys overbuilt? Are you guys, what is rent coming into this, and what are you seeing? And another good question right now is really, really good question to put the brokers on the spotlight. Is really, um, do you think the market is going to correct it or not? Do you think do you think you the properties in the market is going to have a huge delinquency on non-repayment or not? Um, if you follow in the market, you know that there's a lot of Americans, they're not able to pay the rents April 1st. So we pay attention to that. But those are all good questions. Those are all good questions for you to build the relationship with the brokers. Why we want to do it? To be honest, number one is obviously get deals. But before getting good deals, the brokers are going to send to you. You really have to know the broker for some time, and give the trust that the brokers, that you're going to be the buyer in 6 months and 12 months. And that's why you're doing it right now. If you're only showing up in about 6 months, 12 months, that the competition is already doing it, then you're really gonna diminishing your chance to getting a good deals. Everyone can get a deal here and there, but I'm talking about good deals, and the only good deals will comes because you take the time to nurture the relationships. And then I put a market checklist. I don't have here, but it's accessible on the training online, and it really talk about the 15 items I share with people who is doing this day in day out. What are the 15 items to give you a couple of that job growth, that employment growth, and what's a household formations, and is it even comes down to another thing is really big is really what's the industry, is it diversified or not. So we're about 15 items that is actually looking at each items, and you basically have better, that's, you never know that's, this is the best market, until it actually happens. No one really know, but you that helps you, that is designed to help you to actually sink in and decipher all the information that you have grabbed from all the website to other people. Now, um, it give you a better look and how this market fared the other market. And and with that, I basically conclude the Zoom call, and apologize, I overrun a little bit, but I have an online bootcamp event this Saturday and 9 to 12. Let me know if you want to attend, and every join the middle group. I'm sharing this every Wednesday with all you guys. And the next one is really going to be raising capital. Numbers two steps, raising capital. How do you raise a capital? And again, you really cannot raise capital 6 months, 12 months down the road when you have an apartment ready to buy, right? You really have to start doing those work that right now, and talk to the investors, right? While you're talking to brokers right now, getting deals, and I assure you, you have to talk to the investors, and why, why this is a good market, and the why is going to be supported from all we have been talking about, right? Basically, because this is a market that we have been paying attention, so I build a deal flow, and so on and so forth. So with that said, so this is an online event bootcamp, and it's 3 hours on a Zoom call on this Saturday. Let me know if you want to, if you attend. I'm going to move it quickly to Q&A. Open up to you guys can feel free to ask me questions if you guys have any questions. Right. Well, it's really good to have you guys.